controversial little video today. Why are self-managed super fund loans more expensive than normal standard residential loans? That's a question we get a lot. And look, I'm just as happy as anybody else to do a bit of bank bashing when I can, and I will do that. My clients will confirm that for you. But in this instance, I have to say that the blame lies mostly with the regulator. So what is going to define the cost of a loan for a lender is essentially defined by the amount of capital that they've got to hold to lend you that money. So if the bank needs to have 10 cents on their balance sheet to lend you $1, then the cost of holding that 10 cents is essentially the cost of the loan. They might have to raise that 10 cents from deposits that they have to pay interest on. They might raise that 10 cents from the money market where they have to pay people interest on that 10 cents. Whatever the case is, that money they have to keep in order to lend you the dollar is going to be the cost for the bank. The regulator is defining for most lenders, and it's a bit more complicated, but just to keep it conceptual, the regulator is going to define how much money one lender has to keep on their balance sheet to lend $1 to a particular entity. For self-managed super fund loans, the regulator is expecting the lenders to hold more money on their balance sheet than they do for a standard residential loan. And what that does, quite simply, that's increasing the cost of that dollar that the bank is lending to your self-managed super fund versus the cost of that dollar that the bank is lending to yourself. And what do the banks do? Well, they're certainly not going to absorb that cost for you, they're just passing it on, and that's essentially why you will find that a residential loan for a self-managed super fund is more expensive than a residential loan for a standard property. Now you move that to the commercial space and you're borrowing for commercial property, and the regulator is already asking the banks to hold more money on their balance sheet for commercial loan, regardless of whether that's in super or not. That's why commercial loans are generally a bit more expensive than resi loan. You move to superannuation, the discrepancy between the amount of capital they've got to hold when it comes to commercial property is much, much less, and therefore you'll find that the rates that you can secure for commercial property inside or outside of superannuation are going to be much closer. And that's why. So it's not the banks being any more greedy than usual, and they are. It's a matter of the regulator and what is being imposed on them, and the cost that is being created by the regulator.